Hello and welcome back, guys, to the channel. And on today's video, guys, we're mainly going to be speaking or talking about trade management, how to manage your trades, right? So before we get into that, make sure you like the video. If you will like it, hit that subscribe button, turn that bell button on for notifications on future contents and updates. Now let's get into it, right? I've been seeing a lot of traders, new traders to the industry making mistakes and then blaming their strategies that they're not working and etc. That my mentor's a scam and some sort of bullshits like that. But the most important part, the traders, most of traders, who actually are still not profitable yet or are finding their way towards profitability is that they ignore the most important thing, which is trade management, right? You can pass through a lot of content, a lot of books, a lot of journals, a lot of videos, and like if you can't manage your trade well enough, you're not gonna be profitable from that trade. Why? Because there's some instances like this, right? So you could have like a bullish market like that, and then you're having your S&Ds on that. You want to see price go back, mitigate, and once this mitigation is done, you want to see price now come up from here and deliver to new highs. But in order for this to happen, this doesn't always happen, although it does happen like most of the time. It's the actual setup that I myself traded a lot. But in order for you to be actually profitable from these kinds of setups, you need to know how to manage your trade effectively, right? Because you have you have like a lot of instances that can happen within this price action right here. Why? Because price can actually like come back down, mitigate these orders in here, and once this mitigation is done, price could easily deliver to new highs. That's scenario number one, right? Or price could just come here and drizzle down, like completely break structure and keep on going short and short and short to the ends of the earth. That's scenario number two. But the actual scenario that a lot of traders get caught in, and I myself have seen that happen to a lot of people within my reach, is that price could literally come here, right? This happens like all the time. Um, it happens to me also, but I don't take losses in this. Why? Because I manage my trades properly and effectively. Now, this scenario is actually based on the fact that price could come and complete its mitigation. But once that mitigation is done, price now can come up, maybe like in a supply zone in there, and then move down from that supply zone to go and create new lows instead of new highs. And most of the traders here who had like their their positions open here, the stop losses are below the low, are completely fucked in this scenario. Why? Because the stop losses hit, they were actually right there for a while, but they don't understand what has actually happened. Now, okay, so let me remove this shit and like let's go now to the actual charts and test this thing, right? So with that being said, let me give you a simple insight, right? A simple technique that you guys could use and how to manage your trades and actually becoming profitable from most of your trades that you're taking, even though you might be wrong or you might be right in either scenario, right? So let's get into it now. So I myself, the way I manage my trades, right? So we could have like a bullish market like this. Okay, that's very poorly drawn. We could have a bullish market like this. So from this market going bullish, breaking highs, right? We could have what demand zones in here that require mitigation to happen. Now, for that mitigation to happen and actually okay, so for that mitigation to actually happen, right? So we're actually considering price coming down here to do this mitigation, and once this mitigation is done, price can then accumulate from this area to go and form new highs and take out this high as its next liquidity run. Now, for all of this to happen, right, first there must be a pullback that happens for price to actually come down here and complete this mitigation. Now, from that pullback means now we now stop focusing on the major structure, and instead we now start looking at the minor structure. the structure that lies within structure. And if you don't know how to differentiate between the major structure and minor structure, I recommend you go and watch the top-down market structure video analysis and whatever. I don't really recall what the name exactly is, but you know, it's like top-down market structure, something like that. Make sure you go and watch that video. You'll be absolutely sensational in understanding market structure. Now, from that, we need to see actual changes in price action, right? We need to see now price forming an intermediary bearish trend, in which that trend will now come and end here once the mitigation is done. Now, considering this as your potential demand zone, boom, right? So let's move this chart here a little bit, boom. So from this area here, now that our mitigation is done, we now have a what? We now have a demand zone that is mitigated, but what we are left with is this high here that stands as a what? As the next liquidity run area, right? So we're anticipating that price is now going bullish to grab this liquidity resting above that high over there, and probably continue going bullish and creating new highs over time. So from this area, what we require to confirm that this market is ready to go bullish is a change of character that happens when the bearish trend is now over, meaning that price is now going to break higher instead of breaking lower. So this would be considered as a change of character, in which its pullback into the demand zone will be a mini confirmed entry number one, and from that we need to see a price breaking again, right, which will be considered as a break of structure, and from that break we need to see that pullback for the actual confirmed entry, which this entry will now see us going further bullish and taking out this major high up here. Why all of this is done through the Dow theory of structure? It's part of the premium content, which I'm not actually going to speak about it in the free YouTube, but you know, it is what it is. If you do want to get this understanding in the premium level, in the top down level, you could DM us on Instagram at official greenpipsfx, and from there you could join us in our premium mentorship and, you know, like, get to know these things top down. So with that being said, let's now continue with our session. Now what we need to see is price going bullish from here, breaking this high, meaning that that's a change of character, coming back down for that retest on the mini confirm entry number one, boom, break of structure, retest, confirm the entry number two, and then now we can see price going higher and higher and higher and higher and higher until that high over there is broken. Now with the fact that this is my trade right here, right? So this is my trade at the okay, so let me decrease some things in here so that this could actually be quite clearer than it actually looks. So yep, okay, boom. So this is actually entry number one right here, break, retest. So boom, this is entry number one, and the stop loss is below that low, right? Okay, so let's just work on the entry number one first. So this is my entry. Now what I'm looking for is that, okay, so I've taken an entry here, my stop loss is below the low. So what I'll be looking for is that price should now go up, right? So because we had something like this, right? So this is the actual entry. So price should move from my entry position and take out the first high. Once the first high is actually taken out, I would want to see price moving again back down for that confirmed entry number two, and from that I'd want to see price. So this is like okay, let me remove this. So this line here is like my entry position, right? So this is my entry position, this rough area here, and from this area here we want to see price going down to mitigate this demand zone, and once this demand zone is mitigated, we want to see price moving away from that area and taking out this high, meaning that, so this is like break number one and break number two. With break number two, remember this pullback is actually supposed to be above a little bit above my entry position. So if price should come back down, it should not exceed this low, meaning that if my entry line is here, and then this is the low, this trade can actually now come to break even, because this pullback should never exceed this low if price is to continue bullish. But if in some instances it is below, a little bit below your entry line, your entry position, then you should wait for the break number 3, right? Pullback, break number 3. Once break number 3 is done, this entry here is now already at break even. And now you're looking to take partials along the way in areas that have liquidity, right? Below swing lows or above swing highs on their respective manner. Now, we don't want to keep this very long, so let's go and actually see some examples from the actual trades that I myself took today. So we'll be passing through some of my pairs and my trades that I myself have taken today and see how did I manage. And you can actually hopefully you could actually get a thing or two in there. So I'm a day trader. I say that a lot, like I'm a day trader, so I take my setups like from the from the forward, refine until the 15-minute, and then the actual entry is taken on the 1 minute. Now, from this area here, so this was like today's London market. It was actually here. So this was yesterday. I took some trades here, very nice sells through here. But this is our priority main liquidity target, the swing low right there. So this was like today's London market, and after this break here, I want to see. So this was like the entry number 1, the risk entry with no confirm, absolute sniper. It is what it is. But once I saw this break here, I wanted price to come back up into this zone that was actually unmitigated by that time, and then to continue with its bearish trend. But as you can see, price just resolved there, and it actually gave me a 1 minute confirm here for a sell. Now let's look at that sell. Boom. So what we had is price going bullish, right? Price was going bullish, right? Bullish, 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 right? Now from this break here, as you can see, price came down, meaning that this right here, this break here was the change of character. So the market is now changing its character into bearish. We needed to see a pullback and then a continuation bearish, which is exactly what happened. Price made a pullback and then continued bearish. Now, after this break here, I was looking for price, because price like came very rapid and made this low. There was this trade here. I didn't want to take this. It didn't look good to me. Like I know the type of price action that I want to trade, and this wasn't it. This is not the type of price action that I like to trade. So I left it, and like I knew that price was gonna come back. Lo and behold, the price did come back. So I was actually looking at this supply zone here, as you can see, where my horizontal ray lies. So yeah, so this was my trade right here. Protection, you could choose yourself above here, above here, above here, above here, but I was looking to play the safe side of the market. So my protection was about this major high that was holding the actual overall bearish structure. Now from this area, what we can see is what? So this is my trade. Now from this trade area, what do we have? We have first a break of structure. That is break number 1, right? So price breaks, comes back to retest, as I said. Entry number 2, right? So this is after the break. So after the change of character and the break. So this is entry number 1, entry number 2, confirmed entry number 2, right? From entry number 2, look at what price does. Price comes down, breaks. And after this break, price comes, tests this high here, and then leaves. So immediately after this low was broken, this trade was already at break even. Why? Because if price wanted to make a pullback, that pullback shouldn't have exceeded this high, which is below my entry position. And of course, I was looking to take partials. Like I was looking at this area here, area number 1. So partial number 1 here, partial number 2 here, and the last is all the way down there, right? Boom. So let me zoom in. Boom. So partial number 1 here, partial number 2, and boom, right? So even if price comes here and then decides to go bullish, yes, it will hit my break even, but I've already secured enough profits to let price now run without me being concerned of what is happening, right? Boom. So that is simply the justification of everything that I've been saying since the beginning of the video until now. Let's see, and let's go and see a couple of trades here. So we had also pound USD, a pound USD trade. So this is like my watch list. I have a lot of pairs there, but the ones I traded are the ones marked with the flag. You don't have to trade everything in your watch list, guys. You should only go for what suits you. That's a thing that you guys should absolutely pick up. So we had this breakout structure, knowing that price once breaking here could come back here at this overall supply zone, the last up move before the down move, and then, you know, like looking to target this low due to the pound weakness and the dollar strength as its next liquidity run area. Now let's go in to the 1 minute and see how this trade was. So boom, we had price going bullish until reaching our zone, and we actually had the break of this low here, right? So this, I mean, like all this shit here was in considerable price action. Why? Because it's the intermediary trend between this low and this high. Now a lot of people I know got confused there, got trapped in etc., but you know, it is what it is in the end. So we had now this break, and from this break price came back and made that retest. Now from that retest we did also have a mini break right here, and from that break price came back and made this retest here. So I did go like to the 15-second and refine the actual supply zone in here. I'm not going to talk about that. It's absolutely premium stuff, which is not free for the YouTube, and it is what it is. So this was my entry right here. My protection could have been above here, above like here or here, but you know, I like to play it safe, so my protection was above the overall high that held the structure, right? So boom, and from this area now we were now looking to manage this trade. So entry position is there. So boom, we had this mini structural breakout. So you know, like break one, retest, break two, retest, break three. So boom, at this break here, my trade was already at break even, and I was looking now to secure partials from this from these like major lows, I could call them. You know, like I had partial one here, partial two here, hasn't yet been met. So this is still a running trade, and you know, like the actual last one all the way down there. Now let's look at one more final example, and then we'll put this thing to bed. Boom. So this is like the Aussie dollar USD. I mean, I just like USD pairs. Don't ask me why. Boom. So what we had is this setup here. We had this break from the higher time frame, break, a low created, a supply zone left behind. Price comes back up to the supply zone. So this was like the London session, which is not actually the session for Aussie dollar USD. So I don't know why you could have been trading here. Absolutely insane for me, but you know, it is what it is. So from here, price does the following. Price makes this high, this low, and this high. Lo and behold, price comes down and breaks this high, a change of character. So from this change of character, price comes up to that retest there and breaks again. So from this break here, now we were looking for potential areas for a sell. I was actually looking at this area here, right? It held a lot of volume in the eyes. I do not use volume profile or anything like that. Boom, I just see it, right? Boom. So there I was looking at this area here, which was the actual zone that was tested, and that was my entry. But because the spread, my entry was a little bit below it, you know. So I like matching my trading view with my phone. It is what it is. It's just the way I myself like it. So from this area here, what do we see, right? What do we see? So price comes up. Okay, let me lock this so that it doesn't move. Boom. So from this area here, price comes up. Okay, sorry, price comes up, comes down, fails to break this high here, and instead creates this this short market structure here. And from this, we now have a brand new break. And from this break, that was entry number two, right? Boom. So entry number two at this supply, and immediately from this break here, immediately after this break, my entry was already at break even. Why? Because if price was to make a pullback, that pullback should not exceed this high if price is to go bearish. And that is exactly what happened, right? Price never got below that high, kept running down and down and down until our final take profit target was hit. And of course, I took partials here, a little bit here, a little bit here, and the last one here, and leaving some few points running with structure if price still wants to go even more short. So with that being said, guys, everything that I have been saying since the beginning of the video until the end has been validated through these trades, and I hope you find this piece of information very helpful. And if you do, then don't forget to hit that like, subscribe if you haven't, turn that bell button on for notifications, and until the next time, guys, stay safe and peace out.